Good afternoon, everyone, and welcome to the Fiscal Philosophy YouTube channel. It's been a hot minute since you've had a Saturday drop from me, but we've had such an interesting week with earnings. I thought maybe time to discuss Grab, which I have listened to the call and I've had a chance to, look over the materials, reflect on them a little bit as far as what we're seeing in the company. Now, as you can see, immediately following earnings a couple days ago, we have a gigantic dip here right at the end. We were well into the fives on the stock price, and it is now at 480, potentially representing a strategic entry for somebody that's just been waiting for a sub $5 cost basis to take a stab at the stock. And we'll get into what all happened on their earnings and why this could represent a good entry point and why I'm not in a hurry to sell. I have a lot of shares and my cost basis, fortunately, is lower than this, so I'm still green overall on the position. Let's take a look at some of their results that they had. So, brief summary of what transpired in Grab's Q2 earnings. So there was $819 million worth of revenue, surpassing analyst expectations of $811 million. Earnings per share were 1 cent per share, aligning with analyst estimates. Net income $20 million, a big jump over next year, which was $68 million negative, and exceeding expectations from analysts by just a little bit. Also, adjusted EBITDA was $109 million, which was record and was the 14th consecutive quarter of adjusted EBITDA growth. So, yeah, all signs point to the business continuing to kind of thread the needle on what management is laying out in their guidance, if not slightly exceeding in some areas. And yet the stock dropped by a few percentage points after this happened. And I listened to the call, and it sounded confident. There was no Jassy ramble, for example, like what you might have had with Amazon. So I can't quite put my finger on what the market didn't like about this earnings. So for me, it's a very obvious continued hold at this time. I'd like to talk valuation now, specifically regarding adjusted free cash flow. So you can see it's a 177% increase over the comparable quarter in 2024. So it went from $40 million to $112 million. This is still, pretty early on, right? We're just sort of hitting that profitability inflection point. And the first handful of quarters and, heck, 2 to 3 years will probably be the fastest that you see this grow before it starts to hit maybe a point of like a stability where you then get a more consistent level of growth in the bottom line. However, you can see with the jump from 40 million to 112 million, that's 177%. Now you need to keep in mind, they're projecting that their loan portfolio will become adjusted EBITDA break even in 2026. So it's safe to say that that's really not contributing all that much to this number at this point in time. So we're at a point where this adjusted free cash flow number is growing really rapidly. And then we have an entire segment that's one of their faster growing segments is still actually not really adding anything as far as profitability until late next year. So we're still probably 5 quarters, give or take, out from that showing, a break-even point to slight profitability. So what this tells me is we could be looking at a potential for this number to double or maybe even triple in the coming couple of years, which if the quarterly number is 2 to 3 times this, that's easily then $1 billion in the whole year in adjusted free cash flow. Their market cap's only 19 billion right now. And if they're still at that point putting up solid double-digit growth, top and bottom line, I think the market must want to apply. I mean, I would think more than 19x by a lot, possibly a lot more than a 19x, right? I think it at some point it warrants a re-rate, especially with how strong their balance sheet is and everything else. Now, the bears will probably say something about autonomous vehicles, for which I do have sort of a counter argument to that, which I will share with you momentarily. So the AV threat, autonomous vehicles, robotaxis are coming for them. No. First of all, pictured here, you have an autonomous shuttle bus that Grab is testing in Singapore to shuttle around employees. It's only operational a couple hours a day and has a safety driver present. So it's early days, but the way I see it, there's multiple barriers in Southeast Asia and really anywhere in the world, but like especially Southeast Asia, to the autonomous vehicles. First and foremost, the unit economics. Can you get a comparable level of profitability out of an autonomous vehicle fleet as you could from a fleet of human drivers? In most of Southeast Asia, that's a resounding no. They haven't even truly solved for that in the US, to my knowledge, where human drivers are ostensibly more expensive overall. However, Singapore, where Grab is headquartered, is a potential exception where per capita anyway, GDP and income is relative. It's very similar to the US. So you would the unit economics piece would probably be pretty similar there and play out in a similar way. So if it gets solved in the US, probably you can find a way for it to work in Singapore from that perspective. The other is, of course, again, other than Singapore, which I understand to be a very highly developed country in terms of their infrastructure, and highly ordered with regards to a very strong rule of law central government where traffic laws are probably obeyed, if I had to guess. And so the navigation piece of it, putting an autonomous vehicle in a sea of traffic in Singapore might fare better than if you dropped it into like Manila, Philippines, or like Bangkok, Thailand, or something, where it's, I mean, from what I've seen when I've been in Manila, is the traffic is every man for themselves, and it's not like in the US where it's like, hey, there's traffic, there's, good traffic signals at every single intersection, everybody obeys and gives the right of way and everything. It's where you can squeeze in is where you can squeeze in. And Waymo even sometimes struggles with the cars kind of getting like jammed up at intersections and stuff and not being able to move forward and stopping randomly and that kind of thing. And I think if they're overwhelmed in a US city like San Francisco or Austin, they ain't seen nothing yet. Really truly go travel in Southeast Asia if you want to dispute this. So I think AVs are not necessarily the threat to Grab that people think they are. And also, again, in this picture, you can see they're partnering with an autonomous vehicle technology company to test run this shuttle in the one market where it might make sense economically. And if other markets come up, like, hey, maybe things get to the point in Malaysia where maybe the unit economics start to work because their per capita GDP is on a pretty interesting trajectory there, and that would be years and years down the line, by the way. But maybe then they expand that partnership with AV companies. a lot the way Uber is. So you can expect them to kind of use what parts of that are working for Uber. You can expect Grab to emulate as far as the ride sharing and the autonomous vehicle component to it. I don't view it as a threat at all. And I go bananas whenever I hear people talking about this imminent existential threat to Grab's existence of robotaxi. I don't think anything could be further from the truth, to be 100% honest. If you made it to the end, I appreciate it. Be sure to comment with your thoughts on Grab. Also, hit the like and the subscribe button. My Discord is linked in the description. I talk about Grab and other stocks in there all the time. Also, catch me 8 p.m. Eastern every Saturday, Cashflow Kings Live. Become a member there if you want to support that channel, or a member here if you want to support both channels. Why not?